Coming up on Business Incorporated. First shipment of Ukrainian grain leaves the Black Sea port of Odessa. The move hailed by Kyiv and Moscow. China clears 15 Kenyan traders to export avocado. Plus, remittances from expatriate Egyptians rose 2.1% in 11 months. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. We begin with intraday market numbers. We start with African markets, which are mostly negative today. South Africa's GSE index is a sole gainer today. It went up by over 0.5%, while Nigeria's NGX all-share index back below the 50K mark, down almost 1%. Get details of the close on the stock market report on the news at 10. Elsewhere on the continent, the EGX 30 in Egypt is down to 0.37%. Meanwhile, Kenya closed Friday in the green. I guess the positive trend continues in that market. And it's a different picture right there in the Middle East. It's all positive with the markets we track. In the United Arab Emirates, the Abu Dhabi index was up 1.17%. While the Dubai index was higher by 1.18%. Elsewhere in the region, Saudi Arabia's market index climbed by 0.83%, while the Qatari index inched up about 0.74% at intraday. Now let's head on to Europe. Now we see the first shipment of Ukrainian grain set sail after the war prevented supplies getting through. Joining us now, we have Ben Fajrullah from DW News right there in Berlin joining us. Great to have you, Ben. So there must be major relief for countries facing a food crisis right now, Ben.
Relief for the world is how Kyiv is selling this story today. And there are parts of Africa and Asia and the Middle East that have been waiting for months, 5 months since Russia blockaded the south of the country. This sea blockade has prevented commercial ships from getting through, but at the same time, mines, coastal mines and mines in the coastal waters of Ukraine in the south have also prevented the safe passage of these vessels. Ukraine, you have to remember, is the EU's breadbasket and is also a global supplier, one of the biggest global suppliers of wheat, corn, sunflower oil, and all of this has been driving up prices. For some of the countries that are already facing famine, this really puts them in a precarious situation, and the West has accused Russia of weaponizing hunger. Moscow argues that it's not responsible for the huge surge in prices around the world. It blames the West's sanctions on Russia because of the war. But we have seen some agreement just in the past days, Russia and Ukraine signing up to separate deals with Turkey and the United Nations to export what is 22 million tons of grain stuck at Black Sea ports. The deals also allow Russia to export grain and fertilizer, so a win for Russia as well and an important revenue source. It's also managing to get oil and gas through to its European customers right now, through to China and India. So it does have a lot of revenue flowing in. But Moscow will definitely be selling this as a PR victory for the countries that it also supplies in Africa, rather.
All right, Ben, tell us more about this first shipment and the significance for future supplies.
Well, the Sierra Leone flagged cargo ship Razoni left Odessa this morning with 26,000 tons of corn. It doesn't seem much in comparison to what's lying around and sitting on boats all waiting there along these various harbors. It will reach Istanbul Tuesday, if it gets through safely, that is, and be inspected there in Turkey, then go on to Lebanon, a tiny country that the World Bank says is one of the world's, or suffering one of the world's worst financial crises in 150 years in the Middle East. Now, Ukraine and its partners say this is an important step to prevent world hunger and that it will also help Ukraine, of course. Unlocking these ports could equal $1 billion in foreign exchange revenues to the economy, and will be an opportunity for the agricultural sector to plan next year. It's something that's very difficult to do in the middle of a war, especially when some farmers have left their fields and taken up arms. Others are having to deal with shells on their fields, so that makes them very difficult to plow, to harvest. But considering all the bad news that's around and that we get every day since day one of this war, since February 24th, this is definitely a glimmer of hope.
Yeah, well, a glimmer of hope for sure. But how are the commodity markets reacting to this?
Well, this could definitely give inflationary pressures relief today. European markets did open on the upside. A lot of this will already be factored in. And as I said, it's only bit by bit, but a good sign. If this shipment makes it through what is a war zone, there are so many things that could go wrong. I mentioned the mines, a ship being wrongly targeted, Russia taking advantage of this situation and suddenly launching a mass attack on the south. Who knows what could happen over the coming hours and days. But these safe corridors are being coordinated from a specially set up control center in Istanbul, which was put together just last week and launched. And the bad news, really, on all of this is that the president, Volodymyr Zelensky of Ukraine, has said that Ukraine's harvest could be just half its usual size this year due to the Russian invasion. So that's something that many countries are going to have to grapple with. They'll have to look for new suppliers to ensure that their people are fed.
All right, Ben, I guess it's fingers crossed for food supply and grain supplies right now. That was Ben Fajulin, DW Channel's correspondent right there. Thank you so much, Ben. Let's head on to London now. We have Simon Pusey there joining us. Great to have you, Simon. So the Bank of England is probing the persistence of UK's inflation surge. What are you hearing about this?
Hi, Laddie. Yeah, the Bank of England says it will act forcefully if needed to stop the surge in inflation from turning into a long-term problem. And that means it could deliver a rare 0.5 percentage point interest rate rise as soon as this week. All eyes will be on Thursday of this week when the next scheduled monetary policy announcement is due out. Many people expecting the Bank of England to raise rates by 50 basis points on Thursday. But there's growing speculation that the central bank may only raise rates by 25 basis points in an effort to shield the economy. On the other hand, the Bank of England might take some comfort from a recent drop in how much consumers think prices will rise in the years ahead. A survey by the US bank Citi and pollsters YouGov published today showed that expectations amongst the public for inflation in 5 to 10 years actually fell in July for the third time in 4 months, although 3.8% it remained high by historical standards.
Yeah, quite high. And the Financial Conduct Authority has finalized tougher rules for the marketing of high-risk investments. What do these rules look like?
Yeah, so under the new rules, firms approving and issuing marketing must have the right expertise, and those marketing some types of high-risk investments especially will have to do better checks to make sure those investments are well matched to consumers, not just selling and sort of praising things that aren't going to happen. Some incentives, such as refer a friend bonuses, will be banned, and businesses will also have to make risk warnings clearer and more prominent. The FCA's executive director of markets said, "We want people to be able to invest with confidence, understand the risks involved, and get the investments that are right for them, which reflect their appetite for risk." So basically trying to not missell potential investments that could go bad.
Yeah, I guess those high-risk, high-reward platforms will not look so good, at this point. But how are the markets looking?
Yeah, well, it's good news for London's blue chip index today, which was up around 0.5%, supported by a banking stocks rally after positive first half results from HSBC. The FTSE finishing July 3.6% higher than the previous month. The all share there up by just under 0.5%. The FTSE 100 up by over 0.5%, and the FTSE 250 up very slightly there by 0.02%. The pound may come under pressure if the Bank of England doesn't deliver a half-point increase this week on Thursday, as we were talking about earlier. But today it is largely in the green compared to other currencies. It's up there on the dollar by just under 0.5%, up on the euro by 0.17%, and down on the yen by around 1/3%. Lally.
All right, Simon, thank you for the update. Our Simon right there in London. All right, now moving on now, we see mainland China stocks rose along with most other Asia-Pacific indexes today as a private survey on Chinese factory activity showed slight growth. HSBC shares popped. It released its interim result for the second quarter of 2022. While China's Caixin Market Manufacturing Purchasing Managers Index for July stood at 50.4, compared with 51.5 points predicted in Reuters poll. That was in June. Still, the reading was better. China's official Purchasing Managers Index data released over the weekend, which showed a contraction in factory activity. Mainland China markets gained. The Shanghai Composite was up about 0.21% to close at 3,259 points, while the Shenzhen Component advanced 1.19% to 12,413.87 points. And stock futures fell today following the market's best month since 2020 as investors look ahead to another week of key earning reports and economic data. Dow Jones Industrial Average futures traded 22 points lower, 0.03% down. The S&P 500 futures shed about 0.14%, while the Nasdaq 100 futures was down 0.08%. Friday, all major indexes gained, posting winning weeks and capping off the best month of the year so far, and then some. The Dow gained about 6.7% in July, while the S&P 500 added about 9.1%. The Nasdaq Composite rose about 12.4% as investors rushed into tech stocks, beaten up the most during this bear market. For each index, July's performances were the best since 2020. And oil prices dropped today as weak manufacturing data from China and Japan weighed on the demand outlook, while investors braced for this week's meeting of officials from OPEC and other top crude producers on supply adjustments. Brent crude futures were down $1.39 to $102.61 a barrel, while the U.S. West Texas Intermediate crude was down $1.73 at $96.89 per barrel. Fresh COVID-19 lockdowns snuffed out a brief recovery from factory activity in China as the world's largest crude oil importer, and the Caixin Market Manufacturing Purchasing Managers Index eased to 50.4 in July from 51.7. And gold climbed today, buoyed by a softer dollar, while investors strapped in for more economic readings that could determine the future pace of interest rate hikes. Spot gold gained 0.5% to $1,773 per ounce. U.S. gold futures also rose 0.5% to $1,790. The dollar slipped, making gold less expensive for overseas investors, but higher U.S. 10-year Treasury yields kept a tight leash on the non-yielding bullions gain. And after the break, we'll look at African currencies as inflation continues to bite. That's in a moment. Stay with us. Welcome back. Now to our next conversation. Zimbabwe launched a gold coin to be sold to the public in a bid to tame runaway inflation that has further eroded the country's unstable currency. We've seen other emerging market currencies also pressured at this time. Let's discuss the expected impact with Dr. Admire Maparadze-Dube, Head of Markets, Southern Africa Times Media. Great to have you on the program.
Thank you for having me.
Yeah, so tell me about this Muziwatunya gold coins.
Yes, the Zimbabwean authority introduced the Muziwatunya gold coin on Monday, the 25th of July, as you say, to perhaps stabilize economic challenges that the country is facing. The gold coin is going for the open market value of gold on the world market. But with a 5% premium on top, perhaps for minting and other logistical costs. But also we have to consider that it has other characteristics which I can mention here now, maybe perhaps to say this gold coin is of 31 ounces, which is about 1 troy ounce, which is the standard weight measurement used for the international market. It's got a prescribed status, which means authorities have made it mandatory that some holders of large amounts of money, like mutual funds or insurance, have to buy a certain percentage. And also, it's tradable. It's got liquid status, just like our normal everyday currency. Yeah, that's it about the gold coin.
And does the Zimbabwean monetary authorities, what do they expect, from this issuance of gold coins?
Yeah, that question can be answered by looking at why we anticipate it was introduced. Of course, the authorities did not come out clear and mention why they're introducing it. But for us, the analysts were trying to add the mathematics here and look at the situation on the ground. And what we are realizing is that there are three major factors. The first one is of inflation, which is dually introduced because of global issues, for instance, like the conflagration in Ukraine, as well as local issues, like perhaps the fact that Zimbabwean government has no lines of credit at all. So, but at the end of the day, it has to deliver on the mandate, for instance, to build on infrastructure. So they looked inwards, and looking inwards, it meant, for instance, last year's national budget, about 34% of the national budget went to infrastructure development and 12% went to funding agriculture. So that's about 46% of the national budget being put into the local economy. So instantly, it then made the economy very liquid and awash with money. So we have a situation where, when you're looking at that amount of money in the economy, juxtaposed with the fact that it was a slowing economy emerging from the COVID era, and is slowing generally in the world because of all the other geopolitical issues that are happening. And of course, some analysts are even pointing to the fact that the Zimbabwean national population is not growing as fast. That all led to a situation where there was so much liquidity, but not as much productivity. So this was very inflationary in the long term. So you have a government that goes to a situation where, by the way, we have to mention that under UN conventions, it's no longer possible. It's actually disallowed for governments to leverage their local resources that are not mined yet for loans. So I'm sure the authorities then thought perhaps to introduce this gold coin, first of all, to mop up all the excess liquidity that I mentioned earlier, as well as to give a store for value for those who are holding on to large amounts of Zimbabwe dollar, because these people were then going into the parallel markets and trying to exchange their Zim dollars well they've got value because of the inflation, which was standing, by the way, at last count 191%, which was the second highest below Lebanon. But recently, I think 2 days ago, it was announced that figure is surged even further to 256% annual inflation, which is extremely high.
Yeah, quite high. But who can buy these coins, and what are the modalities?
These coins, because they are 31 ounces and they are being charged, the cost is at global markets, which in your previous announcement, just before I came online, you were saying the gold is now it's about 1,700 something US dollars. Then you add that 5% premium. This gold coin is going for about 1,800 US dollars, give or take, at today's gold market rates and those modalities. So the point is, you can tell that it's not meant for the common man on the street, because not many of us have got 1,800 lying around. You can tell that the intention was for the big entities who are sitting on those large amounts of money, like, for instance, the infrastructure developers, which I mentioned earlier. They're being paid in the local currency, the Zimbabwe dollar, and they get to sit on these large amounts of money. So you can tell that it's intended for them to then liquidate their Zimbabwe dollar by buying these gold coins, even though these gold coins have got liquid status, which I anticipate in future you might get houses being sold and quoted in gold coins, but generally it's not for everyday purchase transactions like groceries and the like.
And do you think these gold coins are going to help? Because I've heard some analysts talk about, how this might not really help the FX situation there.
That's a very good question. And to be honest, the jury is still out on that. Points only came out the 25th of July, hardly a week ago. But looking at the numbers on the ground, if the intention is to mop up the liquidity, which I mentioned earlier, you're looking at in excess of 400 billion Zimbabwe dollars they're trying to mop up. And the prices that are currently obtaining with the exchange rate that is there, you see that the government needs to pump up about 495,000 pieces of these gold coins. And 495,000 pieces to mop up that amount of money, that's about 15.6 tons of gold. Because mind you, this coin is of 22 karat gold and 99% purity. So that's a whole lot of gold in those coins, almost entirely composed of gold. So 15.6 tons is about half the productive capacity of the whole country. The country produces about 30 to 35 tons of gold a year. The feasibility of them taking half their productivity and putting them into gold coins is highly unlikely. So as analysts, we think there's some maybe exchange trading that is happening behind the scenes with the authorities approaching those who are sitting on large amounts of money and promising them these coins over time. So the chances of these coins helping is definitely dependent on those sitting on large amounts of money playing ball and agreeing with the authorities. Because if they do not, then we have a situation where the gold coins will just be scratching the surface of challenges that are happening in Zimbabwe.
All right. Well, we'll keep watching, those gold coins to see how it plays out for the Zimbabwean economy. Thank you so much, Dr. Admaya Maparadza, Head of Markets, Southern Africa Times Media. It was great having you on the program.
Thank you for having me.
All right, now let's move on to other stories. Now, remittances from expatriate Egyptians rose 2.1% year-on-year during the period between July 2021 and May 2022. According to the Central Bank of Egypt, remittances recorded $29.1 billion in July 2021 and May 2022 period from $28.5 billion in the July 2020 and May 2021. In May, remittances registered about $2.4 billion from $2.6 billion in May 2021. Remittances are one of Egypt's key sources of foreign currency in addition to exports, tourism, and the Suez Canal. In its report titled A War in a Pandemic, Implications of the Ukraine Crisis and COVID-19 on Global Governance of Migration and Remittance Flows, the World Bank said Egypt ranked among the top 5 countries receiving remittances in 2021, with a total value of $32 billion following India, Mexico, China, and the Philippines. The World Bank attributed this to higher oil prices that fuel remittances from the Gulf countries to Egypt, as well as the economic downturn in Europe and the US. And China's cleared 15 firms to export avocado into its vast market after an audit gave them a clean bill of health. Kenya Plant Health Inspectorate Service, as Kefka said, the 15 firms have been cleared and they will use 9 pack houses that have been approved by both the Chinese and Kenyan authorities to conduct the exports. Kefka confirmed that Sunripe, a fresh produce exporter, was the first one to ship the consignment of avocado to China on Monday last week, followed by Kakuzi PLC. One of the exporters said they had commenced the field harvesting and pre-shipment preparation for an inaugural Hass variety avocado consignment, which was shipped out to China. All the fresh avocado fruits meant for export must also comply with applicable Chinese phytosanitary laws and regulations, health and safety standards, and be free from quarantine pests of concern to China. And that's it on Business Incorporated today. Thank you for watching. I'm Ladi Williams. Remember, you can watch this again on our YouTube channel. You can search for Channels Television on YouTube. Thank you for watching. Bye for now.